Wednesday, November 9th, 2016. Monaco 64, home of alternative economics and contrarian views. So it's a 5:15 p.m. in London. The market has been all over the place today in the aftermath of the US election. Very early in the morning here in London, even before the European markets were open, the US futures markets were heavily down, like the stock market. The Dow was down over 800 points at one point. There was a limit down. S&P was down over 100 points. Gold was up like $60 above 1337 was the high. But you never know with markets, and I said that in one of my previous videos just recently, that we need to wait a couple of days to see, what happens. I think one of the reasons why the markets rebounded, the stock market, most people, in my opinion, thought that a Trump win would lead to instability, but the fact that Hillary Clinton conceded the election, Trump was quite diplomatic in his victory speech. It looks like he, a lot of people were surprised by the way he spoke. So I think that's calmed things down for now. And yeah, quite amazing. I mean, gold now is $12.78, so it's only up $3. Silver $18.55, up 20 cents, up 1%. So all the gain we saw earlier today is evaporated. I'm still positive longer term, of course. What else? Well, the most important, the stock market right now, the Dow is up 158 at 18,500 roughly. So the high is 18,545. And one thing I wanted to talk about, though, that I've noticed is the Treasury market. We're seeing yields spike higher, especially in the longer end. Let's have a look here. The 30-year yield is up almost 20 basis points, which is a huge move. We're at 280, so it's up 19 basis points. So that means the price is dropping of the 30-year bond. The 10-year note, the yield is up 15.5 basis points. We're at like above 2%, which was a key technical level, and we're at the highest yields since the beginning of the year, since around January, for the 10-year and the 30-year. And one thing that's happening is that the curve, the yield curve is steepening. The 2-year yield today is only up 2.2 basis points. So the longer end has gone up a lot more than the shorter end. So that means the curve steepens. And that basically is a signal that investors fear inflation, a steepening yield curve. Maybe the signal from the new political landscape is that there's going to be a lot of government spending. And that that there will be more debt as well, because if there's more debt, the price of Treasury should go down. So that's what it seems to be telling us, that Donald Trump might use fiscal, very loose fiscal policy or government spending to try to boost the economy. That's what the yield curve is telling us. And I think that's quite important, because I've made several videos in the last few months, or in the last 6 months, in July, when the 10-year yield reached around 1.35%. I asked whether that was a bottom in the in yields of the 35-year bond bull market that we've had since 1981. 1981, the 10-year yield roughly topped at around 15%. Yes, 1.5, and it's been coming down ever since. And 135 was the lowest since 1981, and it looks like now we're starting a bear market in bonds. And it kind of corresponds. I was reading an article today and looking at the chart of the 10-year yield, how it bottomed around the early to mid 60s. And when President Johnson came in and said he was going to start the new society and, government spending, that kept going through Nixon, yields started going up. So maybe that's what the market is seeing here. So right now, let's have a look. 10-year yield is now it's 201.71, so it's up 16 basis points, so clearly breaking through 2%. The 30-year is 281, up almost 20 basis points, and the 2-year yield is and that's up, let's have a look here, refreshing, up 3 basis points now at 88 basis points, or 0.88%. And to finish off, the Dow is up 158. Gold is almost unchanged now from yesterday evening, 1277, up $1.50. Silver up 19 cents at 1853. So disappointing for gold. But patience, I think, is the best policy here. Maybe, these algos and the algorithmic programs and quantitative analysts are saying, bond yields are going up. That's negative for gold. But that's not necessarily true, because in the 70s, bond yields were rising and gold was rising. So that's it for now. So Treasury seem to be, pointing towards more inflation and more government spending. That's what one of the impressions I get. The markets, I think it's still, could go anywhere. Stock market, precious metals, I'm still positive longer term. So if you enjoy my video, please give me a thumbs up, share it with friends, colleagues, family, and if you'd like to subscribe to my channel as well, if you haven't yet, please do. And if you'd like to donate to my channel, there's some links below in the description. Take care, and I'll talk to you later. Bye.